well, we have a Federal Reserve decision ahead of us this week. What do you expect from Jerome Powell? What do you expect from Wall Street reaction during the next couple of days?
I think it's going to be really interesting. I mean, clearly we've had plenty of support from the Fed over the last few weeks because of the effects of the coronavirus. And I think perhaps what traders will be waiting for this time round is a bit more insight as to what's going to be happening going over the next few weeks for the economy. So I don't know we're expecting that much action from the Fed. I think it'll be more about the dialogue about how they see the economy going over the next few weeks, next few months, because so much is unknown at the moment. In the stock market, I was looking just before I came on, and the S&P 500 is back up to where it was beginning of March. It's rallied something like 30%. So stock markets have definitely liked the certainty from central banks like the Fed over the last few weeks. And I think now they'll be looking for a bit more guidance as to how these policymakers see the economy unfolding.
We are talking about Federal Reserve, but we cannot forget about the European Central Bank, which will also make a monetary decision this week.
I think, well, we could have, more action from QE. I think quantitative easing from the European Central Bank. I mean, going into this whole coronavirus crisis, the European economy was looking a little bit unsteady anyway. If we look at Germany, which narrowly avoided recession in 2019, I think it is a bit concerning. I'm getting some strange interference. Sorry, it is a bit concerning ahead of this. So I think we could see some action from the European Central Bank. Clearly, we have, concerns about Southern Europe, about the effect it's going to have on the economies of the likes of Italy, which has been particularly hard hit by the coronavirus over the next couple of months. But I don't think any like with the Fed, I don't think any sort of monetary policy action from here is going to have that much of an impact, because so much has been done over the last few weeks. We may see short-term volatility, but I think what investors and traders are looking for is, again, what these central bankers think of the state of the economy. I think so much is unknown at the moment until we start going back to normal, that they're perhaps looking for a bit of insight there. But I'm not sure how useful that will be, because none of us know. I think as these lockdowns get lifted, it's not as if a reset button is going to be pressed on the economy. So I don't see that much of a market reaction from the European Central Bank meeting this week.
David, we do not have much time, so I would like to ask you a last question about oil, because last week's main theme was oil prices. Obviously, we still remember this dramatic session last Monday when oil prices went down to negative $40.
Yeah.
Right now, I'm looking at CME valuations and CME pricing. Right, current market contract is being valuated at $11.56. So, what do you expect in near few days from oil prices?
It's just a crazy market. It's swinging around 20% a day some days. So increased volatility. We went negative last month. That doesn't mean we can't go negative again, I think, in June, or in May, actually, for the expiry of the June contract, because we still have oversupply. We still have lack of demand. It's a fascinating market to watch. I think it's a very difficult one to trade. So expect more volatility, I think, for oil is the best anybody can say.
And this is a great conclusion of our short but meaningful talk. Thank you very much, David. I wish you a very pleasant afternoon.
Thanks very much. You too.